everyone for joining us today. On behalf of IREM Nebraska Chapter and Sarah, Emerson, Neal, myself, and Tiffany, we appreciate you joining us today. We had some questions about the CARES Act, and there's so much information with it that we wanted to find out from an expert about property management, whether it's residential or commercial. And so we're really lucky today. I'm grateful to have Adam Lammers here with us from Equitable Bank. Adam, do you want to give a little brief intro of your background?
Sure. I have been with Equitable for a little over 8 years now, and prior to that, I've been in banking for about 25 years. I got you back on the screen here now, so I'm good to go. But 25 years I've been in commercial lending for about 15, and that's pretty much it.
Okay, Adam. Our first question is that the funding has run out for the Payroll Protections Program, and that Congress is working on another package. Should businesses still apply in hopes that there's more funding going to be approved, and are banks taking applications without funding being available?
The answer to both questions are yes and yes, and I expect the funding to reopen hopefully this week. Congress worked through the weekend. I know one of the concessions I heard was they wanted more money to support hospitals. That was mutually agreed upon, so that was added. A part of the package also was that $200 billion be for the large banks and $50 billion be carved out for your smaller community banks to make sure they have equal distribution of funding.
Another option is the Main Street lending option. What are the differences, and can you describe what this program is?
Sure. There's actually 4 different programs that rolled out with the CARES Act. The most popular one that everyone's heard about is the PPP, or the Payment Protection Program loan that we just spoke about. Another one is the bridge loan, which is probably the least popular. It's just for people that have immediate funding needs before the PPP rolls out to be able to get access to money. The third one is the EIDL program, and that one is directly through the SBA and the SBA website for people to fill out and ask for money. And then the fourth one is the Main Street program, which we have limited amount of information on. All we have is what was approved in the actual CARES Act. We're still waiting on the SBA to give us guidelines through their SOP on how that they want us to fund those. I'd like to go back to the EIDL program. The EIDL program that's directly through the SBA kind of overlaps with the PPP program, but there is a specific use for that. If you have a tenant that leases a space, they could, even if they have poor credit, they could apply for the EIDL program, and if they have employees, they can get a grant up to $1,000 per employee for applying just online through the EIDL program. The process usually is taking about 2 weeks for people to actually get their checks for that. A lot of my customers personally have just are independent and are receiving a $1,000 grant. But on top of that, there will be a loan that is basically scorecard driven, so it's mainly derived from their credit scores, and you have to put in your gross revenues, your gross expenses, and then they'll figure out a loan amount for your need there, and that the terms on that are pretty generous. It's a 3.75% interest, but the repayment period can be up to 30 years. So that's a nice little program for small businesses, especially if you have a tenant out there. Make sure that they've applied for that. I did mention that it kind of overlaps with the PPP program, and the reason I say that is because with the PPP program, a lot of this loan is forgivable, but if you applied for both loans and you did get that grant, the amount of forgiveness on the PPP loan is subtracted from what grant you got. on the EIDL loan. So let's
Okay,
say,
good to know.
yeah, let's say you got $20,000 from the PPP loan, you have 2 employees, you got $2,000, only 18,000 of that is forgivable returns to make sure it jives with this 8-week period.
Okay, moving on. Where do we find the forms to complete the application, and how long does it take?
I went ahead and sent everybody on this call a copy of the application. Originally, they had a different application, and the day it rolled out, they changed it to this application. So, and wouldn't take it without the new application. So, it was a scramble on all the bankers to get all new applications signed. But it's an electronic PDF where you can actually stamp your signature on there, and you send it in to your local bank. And once you're approved on the PPP loan, the bank has 10 days to actually get your loan closed and funded. Yes, so there is a time period there, and then as soon as you are funded, that's when your clock starts to start paying, to start paying your employees for the 8-week period. Whenever something's approved, they're taking the amount it's approved for out of the bucket. So if you're approved, you're tagged for those funds.
Got it. Since the loan is specific to certain expenses, payroll, rent, utilities, etc., should I set up a separate account for this so that it's easier to record and track costs, thus not commingling with my regular accounts?
It is suggested that you do that if you need another paper trail. Most accountants will tell you that that's the most proficient way to track your money. But if you're good at QuickBooks reporting and being able to show that the money primarily went towards payroll and you paid payroll taxes for the employees, that would be sufficient.
Are most banks negotiating deals with their clients in regards to commercial mortgages, deferring payments for a certain amount of time, lowering the interest rate, adding more term to the mortgage?
We have gotten guidance not only from our bank regulators, but also from the SBA to do certain things for different programs. The most generous ones, in my opinion, are our current SBA loans. On the current SBA loans, right now, the government is paying their whole payment, principal and interest, for the next 6 months, and that was part of the CARES Act. That's the most generous. And then on top of it, if they wanted, we can defer their payments for another 6 months and tag that onto the back. So they really could not have a payment for a full year on those SBA notes. Those are the most generous. I'm sure a lot of bankers are wishing they would have put more of these SBA loans in place prior to this time frame. But for non-SBA loans with traditional lending, which most of your clients and yourselves would have, the guidance we've gotten from bank regulators is to do interest only for a 90-day period, and then pick up those principal and interest afterwards, and they won't treat them as a troubled debt restructure on our balance sheet. Now, if the customer was, in a really hard way and we can prove it, we would work with them however we could to make sure they're successful, because our success is, on their success as well. So we do try to work with them. I did send out a video to everybody, and I think it's very important to watch that video because people have been hearing a lot about forbearance. Some banks are doing forbearance, and if I were to compare forbearance to anything, it would be if you're paying your credit card and the credit card company says, we're just going to not report to the credit bureau for the next 6 months. but at the end of the 6-month period, you have to bring all your payments up to date. Some banks are doing that, but it might be kicking a can down the road, but it puts a little bit more stress on you to catch that up on the back end there.
Okay.
I've heard some banks doing similar to what the SBA is doing is just waiving the payments for 90 days, but putting it on the back end. We haven't gotten any guidance from our regulators to do that as of yet, but in the event things do get worse, I could see that happening.
What, if any, kind of relief is provided for commercial mortgages?
I think we kind of covered that a little bit with the interest-only period for commercial mortgages. That's what we've been given guidance to. It was mentioned in here, savings accounts only go so far, and we definitely agree. In the event the savings account does run out, that's when we have to work through other issues to make sure the business and the entity stays afloat.
Okay, and you referred to this next question, so that was included with the savings accounts only last so long, and really you're waiting on any other guidance to be able to help with plans for the tenants, commercial or otherwise, correct?
That is correct. We have to just abide by what's given to us, otherwise we could there are some banks currently in the news that are being sued for the way they handled the EIDL loan, and there is there's been a lot of interpretation. We kind of mentioned prior to this call that the SBA has changed the rules on how they want these PPP loans, and we've been kind of feeling our way through the dark on this. It's been a really fast rollout. The SBA had to invoke some special law in order to roll it out as fast as they did. And with that, we just have to, be extra careful on how we manage these funds. Some banks are actually escrowing for these funds. So let's say I'm going to make payroll this month. There's an account at the bank that they have to request for the funds, prove that what their funds are for in order for them to get a draw. It's no different than how we do it on construction loans. Our bank has taken the stance that that will open us up to lender liability, and everything in the act says that a bank is held harmless as long as, and it's all on the borrower's shoulders to prove that this for forgiveness.
That's interesting. I didn't realize that there was banks. So you're saying that there's some banks that have either they're offering to escrow or they might have a policy that they might escrow?
A lot of them, well, not a lot of them. I know 2 or 3 of them, they're not making it a choice. And the reason I think they're doing that is because they don't want any of this 1% money that's not forgiven on the books. And if they can manage it and record it, they have more chance of getting their customers forgiven.
Is there some part of it also that as more people are borrowing money, that there could just be a liquidity issue? Essentially, if people are committing more of their cash to debt payments, are banks just nervous about repayment?
You bring up an interesting point. These loans are 100% guaranteed by the SBA. So if the business fails, the SBA will pay off the loan. Okay. However, a lot of the loans we're giving, these PPP loans, are for our current customers that pay us on other loans on top of it, and we wouldn't want this one to drag them down, so we'll have to work with them on the other loans in order them to pay this in the event it's not forgiven.
Well, Adam, thank you so much for your time today with us and helping us navigate some of these questions. I know there's a lot of uncertainty and a lot of change and even more coming with this new funding bill they're working on. So just really appreciate your time. Thank you so much.
Yes, thank
You're
you, Adam.
welcome. Thank you.
And everyone, thank you for joining us. Have a great day.